Hello, I want to welcome everyone participating in today's webinar, the 2020 Compliance Supplement Update. My name is Omid Mohebi. I'm an audit manager at GRF CPAs and Advisors, and I will be today's moderator. I'd like to start off today with a few housekeeping items and explain what you will need to do to earn CPE credit. Participants seeking CPE credit today must complete and submit a short evaluation survey that will appear automatically following the webinar. You will be asked to recall these words in order to receive credit. Please write down the CPE words when they are given and keep them until you receive your certificate. They will not be provided again. If you have any technical questions or issues during the discussion, please use the questions function to speak with our administrator for assistance. The slide deck and recording from today's discussion will be available on the events page of our website. Technical support and CPE questions may be addressed to Nathan McElveen at nmcelveen@grfcpa.com. Next slide, please. Today's learning objective is to provide attendees with a better understanding of the key items included in the 2020 Compliance Supplement Update and to identify single audit priorities for 2020 and beyond. I will now introduce our speakers for today's webinar. Walt Derengowski is a partner in the audit department here at GRF CPAs and Advisors. Mr. Derengowski has over 18 years of public accounting experience with GRF CPAs and Advisors, servicing the nonprofit sector exclusively. He manages audits for a wide variety of nonprofit clients like trade associations, charitable organizations, non-governmental organizations, private foundations, political action committees, and other similar institutions. He frequently travels internationally, working with clients to audit federal award programs in accordance with the Uniform Guidance OMB circulars. Lindsay Dean is a senior manager in the audit department and has worked in auditing and accounting since 2004. She plans and coordinates the audit fieldwork for approximately 50 audit engagements on an annual basis. Ms. Dean works extensively with nonprofit organizations, specifically charitable organizations. I'll now turn the presentation over to our speakers.
Thank you, Omid, and good morning, everyone. Lindsay and I are both pleased that you can all join in today's webinar. For those who live in the DC, Maryland, and Virginia area, I hope you get to enjoy some time outdoors as it's a beautiful day outside. I believe it's supposed to get into the 70s today, but you didn't tune in today to listen to me and give you the weather forecast. Today, we are going to go through the new OMB compliance supplement. But before we get started, please make sure to look at our website for any future webinars we offer at GRF CPAs and Advisors. We also have an archived library of previously offered webinars that have been recorded on our website under the resource section. There's a lot of useful information, so don't miss out. The agenda today, we will start going through the background of the compliance supplement and provide key updates. And then Lindsay will finish today's webinar with the 2020 and beyond single audit priorities. Time permitted, at the end, we will try and get any questions that you left in the chat box. So let's get started as we have a lot of information to go through today. The compliance supplement, previous slide, please. Oh, next slide. Sorry about the compliance supplement is based on the requirements of the Single Audit Act amendments of 1996. And the 2 CFR Part 200 Subpart F, which provide for the issuance of a compliance supplement that assists auditors in performing the required audits. These audit requirements apply to all non-federal entities. And a non-federal entity is defined as a state, local government, Indian tribe, an institutional of higher education, or a nonprofit that carries out a federal award as a recipient or subrecipient. Every year, the Office of Management and Budget releases the Compliance Supplement. And the Compliance Supplement is a document that identifies existing important compliance requirements that the federal government expects to be considered as part of the audit required by the 1996 amendments. Now, without this Compliance Supplement, us auditors would need to research many laws and regulations for each program under audit to determine which compliance requirements are important to the federal government, and that could have a direct and material effect on the program. The updated 2020 Compliance Supplement was released in August 2020, and the addendum was released 4 months later on December 22nd, 2020. We were all patiently waiting for the Compliance Supplement as it was anticipated to come out a lot earlier than August 2020. One thing to note is the addendum was released to address new federal programs established by the CARES Act and the impact of COVID-19 on existing programs. The addendum is effective date is for audits of fiscal years beginning after June 30th, 2019, and it must be used in conjunction with the August 2020 Compliance Supplement. Please note, reports issued prior to the publication of the addendum are not required to adhere to the addendum requirements. Now, this slide here has listed out some really good recommendations on how to stay current with the new Compliance Supplement and the addendum. First off, you're going to want to review the Compliance Supplement as well as the addendum. And now I realize that the 2020 Compliance Supplement is over 1,500 pages long, and the addendum is 118 pages long. But this is something we all have to follow, as it's mandatory to be in compliance with these rules and regulations. Number 2, check with the AICPA and GAQC website for updates. 3, the third and fourth, review any memos issued from OMB and review your awards for all terms and conditions. Also, you're going to want to read any frequently asked questions. And lastly, check with the federal agency websites, as they are including some useful information and interpretations to the updated supplement. Now we're going to go through the key updates. There are 8 new COVID-19 programs and 6 pre-existing programs to which COVID-19 funding compliance requirements have been added. As noted on the slide here, the COVID-19 awards are funded under the following 4 acts. You have the Coronavirus Preparedness and Response Supplemental Appropriations Act. You have the Families First Coronavirus Response Act. You have the Coronavirus Aid, Relief, and Economic Security Act. And lastly, the Paycheck Protection Program and Healthcare Enhancement Act. Also, if you go to the supplementary Part 2 matrix in the 2020 Compliance Addendum, you will be able to see all the new updated programs with the requirements subject to audit. Now, the 4 largest programs under the CARES Act are listed here on this slide. As you can see, the Paycheck Protection Program, or PPP, is the largest of the 4 programs. And the United States Small Business Administration, or SBA, loans were provided to help businesses keep their workforce employed during the COVID-19 crisis. The PPP program is the only program not subject to the single audit and not included on the schedule of expenditures of federal awards. The next program is the Provider Relief Fund, and this program really is to support healthcare related expenses and is provided to those who lost revenue attributable to COVID-19. The United States Department of Health and Human Services, HHS, will be distributing $175 billion to hospitals and healthcare providers on the front lines. The Coronavirus Relief Fund, the CRF program, is funded through the Treasury Department and was created to provide spending totaling $150 billion in direct assistance for state governments, local and tribal governments. Payroll expenses for public safety and public health care and similar employees whose services are substantially dedicated to mitigating or responding to COVID-19 pandemic. The last program here is called the Educational Stability Fund, and this is administered by the United States Department of Education. And this program provides support to state educational agencies and states with the highest coronavirus burden. And it was really set up to address specific educational needs of students, their parents, and teachers in public and non-public elementary and secondary.
Thank you, Walt. We've now come to our first polling question. Polling question number 1. Did your organization receive any COVID-19 funding? Please answer yes, A, B for no, and C for unsure. Please take a moment now to answer. While participants are submitting their answers, I'll provide the first CPE word. The first CPE word is program. If you want to receive CPE credit, please jot these words down because you will need them for the survey following the webinar. Again, the first CPE word is program, P-R-O-G-R-A-M. And there we see the results. Approximately 60% said yes, 30% no, and 11% unsure. Thank you.
Now, there are two ways the PPP loan can be treated for financial statement treatment. One way is to treat as a loan, and when the loan has been forgiven by the bank, the auditee recognizes the revenue as a forgiveness of debt. The other way is to treat this as a conditional contribution, and as the auditee has met the condition and documented that they met the condition, which is more administrative in nature, then the auditee can recognize the revenue as they have met those conditions. Now, please note, the auditee's position should be clearly documented along with any other government assistance. Again, the PPP loan is not subject to the single audit. Also, the funds need to be tracked to ensure no double dipping with these funds and using other federal funds or restricted income. The next source of funding that I'm going to briefly go through here will be the Provider Relief Fund. This funding, again, was provided to support healthcare related expenses or lost revenue attributable to COVID-19. And there has been a lot of changes in direction throughout the course of 2020 under the PRF program. And also the concept of lost revenue or reimbursement for lost revenue is a new concept as it relates to single audits. The guidance places significant importance on the PRF reporting required by HHS, which will identify the expenditures, including lost revenue for calendar year ending December 31st, 2020. Recipients with the fiscal year ended before December 31st, 2020 will not include any amounts recognized from the PRF program on the schedule of expenditures of federal awards until the next fiscal year. Recipients with the fiscal year end of December 31st, 2020 through June 29, 2021 will report on the SEFA amounts reported on the 2020 PRF report. Now, recipients with the fiscal year ended of June 30th, 2021 or later will report amounts on the SEFA based on guidance to be released in the 2021 compliance supplement. Now, I was very relieved to see that the compliance supplement addendum included an extension on the single audit due dates. Typically, the single audit report is due at the earlier of 90 days from the financial finalization of the single audit, or no later than 9 months from the end of the auditee's fiscal year. Now, auditees with a year end through 9/30/2020 that received COVID-19 funding are granted a 3-month extension. However, there is a caveat. This extension only applies if the auditee received COVID-19 related funding. And there is no form that you will need to file to receive that extension. However, the addendum advises that auditees should maintain documentation of the reason for the delayed filing. This slide here is just a snapshot of the normal due dates with the new extended due dates. And I'm not going to spend much time on this slide, as it's pretty straightforward here. But again, I want to emphasize that this extension is only granted if your organization received COVID-19 funding. And if your organization has not received COVID-19 funding, well, then you will not be allowed the 3-month extension. So the new reporting requirements, which is under Part 3 of the compliance supplement that I want to talk about, is specific to reporting and has some additional reporting requirements that have to deal with FFATA, which is the Federal Funding, Accountability, and Transparency Act. For the FFATA reporting requirements for all new and existing programs where the reporting is marked Y in the matrix, auditors must consider testing compliance with FFATA. This is effective for all fiscal year ending June 30th, 2020, where the reporting is identified as subject to audit. FFATA applies to direct recipients of federal funding who then make first-tier subawards of $25,000 or more. FFATA has been a reporting requirement since 2010, but it hasn't been something that auditors have been required to test in the compliance supplement for several years. What FFATA does is it requires any federal grants, contracts, loans, or other federally financial assistance to be made publicly available on the US Spending Gov website. Now, it's not automatic. We don't always need to test this. Auditors will need to evaluate and determine if the direct and material, if it's direct or material to the federal program. If it is, then you are going to need to test this. Maybe some good news is the Coronavirus Relief Fund is not subject to FFATA. One of the other interesting impacts related to FFATA is the compliance supplement addendum indicates that grantees who have a fiscal year ended after September 30th, 2020, auditors have to consider whether FFATA is direct and material, not only for these new and existing programs in the addendum, but for all major programs. That does not apply to September 30th, 2020 year ends, but for any year ends after, we will need to consider direct and material application of FFATA reporting requirements, regardless of COVID-19 funding being received. When testing for FFATA, auditors are going to need a listing of all subawards that were charged to the major program. All subawards issued over 25,000 will potentially need to be tested, and auditors will need to obtain the grant agreements and any modifications to the sub-agreement. In addition, auditors will need to coordinate with their clients to obtain access to the FSRS system for testing, which stands for the FFATA subaward reporting system. All subawards over 25,000 that are subject to the FFATA requirements, auditors are going to have to obtain a screenshot or some kind of screen sharing, since recipients are the only ones that have access to the system. And this is going to make it very challenging for auditors to test this. Some of the elements the auditors are going to have to look at when reviewing the FSRS system is the timing of when the recipient entered the information, and does it agree with the date, amount, subaward number, the DUNS number, and if its information was properly completed. If this information is not completed correctly, the auditee then has a compliance finding that we will need to be included in the audit report. If you have a finding related to FFATA, there are some required elements that need to be disclosed and included in the non-compliance finding. The compliance supplement is very specific on what needs to be reported as a non-compliance finding. And they do have some examples in the supplement that can provide you guidance. So I highly recommend that you look at some of those examples. We have one more slide here before I transition the presentation over to Lindsay. But the donated personal protection equipment, PPPE, is also included in the addendum, and it indicates that entities that receive donated PPE should report the fair market value at the time of the receipt, and a standalone footnote included on the SEFA. This will likely be an estimate unless the federal agency has provided the dollar value to you. It will not be counted for purposes of determining thresholds for single audit or determining the type A/B threshold for major programs. The PPPE footnote will be marked unaudited by the auditors. Okay, with that, I will turn it over to Omid to go through our next polling question, and hopefully we will have time to answer any questions that you have raised in the chat box.
Thanks, Walt. Well, we've now come to our second polling question. Polling question number 2. Did your organization's internal controls change significantly as a result of working remotely? Please answer A, yes, B, no, or C, unsure. Please take a moment now to answer. While participants are submitting their answers, I'm going to provide the second CP word. The second CP word is award. If you would like to receive CP credit, please jot these words down because you will need them for the survey following the webinar. Again, the second CP word is award, A-W-A-R-D. A quick look at the responses. 37% said yes, 39% said no, and 24% are unsure. Thank you.
Okay, thanks, Omid and Walt. The next few slides, we're going to be taking a look at some of the 2020 updates when we're looking at our single audits, and also just some of the trends and the priorities for this fiscal year. So our first slide has to do with internal controls. In the poll, it looked like it was actually kind of a even split between those of you who had changes in the internal control system and those who didn't. I think overall, you went from basically working one way on site, the majority of our organizations, to very abruptly switching over to primarily remote work and just having to do things a little bit differently. So I think that, when we do our single audits, normally we're always looking at internal controls. It's always a highlight. And we're gonna be asking how things have changed, what new people you have, what new systems. But this year, more than ever, things have changed drastically for so many organizations. So we're definitely going to be focusing on that area. What's changed as far as the areas of weakness for the organization, what areas are susceptible to error or fraud or just compliance issues, whatever it may be. So as you're preparing for your single audit or any audit, one of the best things you can do is to go through and look at your each cycle, so cash receipts, cash disbursements, payroll, and document for us what you're doing right now. This is a good opportunity for you to take a look as well to see where you're at, what's changed, and what you continue to need to tweak to make sure that you're in the best position you are as far as that control environment. So these are some of the priority risks that we're seeing as we head into this fiscal year. So number one, cybersecurity. With everyone depending more on technology and working remotely, not being in the office, we're seeing a large increase in the amount of scam attempts or fraudster attempts on our clients. So that can be anything from the spam email that somebody's clicking a link on to emails from email addresses that seem like they're the executive director, for example, to just attacks on susceptible websites. There's a whole range of things, and they're getting more and more advanced and more tricky. So I think as far as a risk, this is a good time to, as we're heading into our audits, we're looking more closely at the responses on what policies you have in place and around your IT controls, what things you've put in place. If people have their computers at home now, they're working on their home networks, what things are in place there to protect you and keep that data safe. We're also looking at, are you training your staff at all? So have you implemented a program to see what they're going to do if they get that suspicious email or whatever? I know we do testing and we do programs to educate our associates and staff, to everyone, to the partners on a periodic basis, just because it's something that if you don't do it all the time, you might get tricked. So that's another thing to consider when you're looking at the risks for the current year. Another unfortunate thing that we're running into is the pandemic has had a negative effect on a lot of organizations' revenue streams, whether it's canceled events to just donors that didn't come through this year that normally do. So there's a potential that some clients will have liquidity issues or potential going concern issues. So one thing that we're seeing and recommending is that if you know you're in that situation, it helps if you document what your mitigating plans are in advance, and even reach out to the auditor to say, this is what's going on, and this is what we plan to do, whether it's decreasing expenses or grants that are in the pipeline, whatever you have. Good time to look at that in advance. Another risk is segregation of duties. Sorry. So for segregation of duties, I kind of mentioned internal controls on the last slide. Segregation of duties is obviously a big part of that. So when you went from being down the hall from somebody, bringing them the approval request, or opening maybe cash receipts with another person in an office, to everyone working in their home office, there's been some adjustments there, and we're just seeing that sometimes things maybe are falling through the cracks or need to be reassessed of, how can you creatively or using technology fill the gaps in any of those segregation of duties that used to be there. And so that's another area that we're seeing risks in, making sure that those are maintained. And the last one on here is just change management. So things are changing on a everyday basis, whether it's staff, people leaving the workforce, people going from full-time to part-time, people dealing with, personal things, their children, or, whether caregiving issues. And then on top of that, you have system changes. So you have new software that people are adapting to. You've got new technologies. So we're communicating on Zoom or meetings or whatever you're using in this situation. And it's kind of just, how do those things interact with each other? What could be a risk there, and are you identifying that and kind of being proactive about doing what you can to manage that? And then the other thing is, of course, compliance. So Walt just went through all these new programs that we have and all of the new requirements that have come down between this compliance supplement and then just the individual agencies putting out information, et cetera. So there's a huge amount of compliance that you're required to stay on top of. And it's really, that's a huge risk. So whether you have somebody specified in your organization to kind of be on top of that or however you want to address it, obviously that's one of the areas that if you don't comply, you run the risk of either having disallowed expenses or, you know, not having your loan forgiven, depending on what type of funding you have this year. So that's a huge one. And then if you look at the next slide, kind of along the compliance that I was just talking about, these are some of the challenges that related specifically to the COVID-19 funding. So we've got federal and pass-through entities that were required to identify that funding. And in some cases, you know, when it first started coming out, that wasn't really clear, or it wasn't necessarily, it was more of just an emergency situation to try and get those funds out and start helping at where organizations could. So we had, again, this emergency nature of things, kind of like get the money out first, and then kind of the guidance coming out after that. So that created a lot of challenges for this current year that we're auditing. We also had instances where the OMB was putting out information and they were saying, you know, look to your federal agency to interpret what the details are on this. So there was kind of a, in some cases, delay of, you know, get the information to the federal agencies and then have them put out more guidance on their own websites. So that was a challenge for some of the grantees getting that funding, trying to figure out what they were doing with it. We also have, at the same time, a lot of organizations that are getting this funding that have never received federal funds before, or maybe they hadn't met the threshold to get the single audit before. So there's a lot of hoops to jump through, as you know, if you've gotten a uniform guidance audit before, when you get that audit. So we're going to be looking at a lot more transactions, a lot more compliance requirements. And so for organizations that are doing that the first time, it's always a challenge, let alone with new awards and kind of a uncharted territory. So that's a big one. And then finally on here, there's a lot of organizations that are subrecipients of federal funds for the first time. So that kind of presents a different set of questions and challenges of complying with whatever your pass-through entity requirements are, making sure that you do provide their monitoring, and also, of course, making sure that they give you the information that you need to report on your schedule of federal expenditures when you come back and get an audit in the current year. So then this is kind of another priority that, you know, looking at all these risks, these changes and everything that's happening, and especially, you know, with the pandemic, if you didn't have a business continuity plan before, I think it's really highlighted that this is something that's pretty critical for organizations going forward, whether you get a single audit or not, really. But the business continuity plan is kind of this is just showing the kind of the 4 steps of the plan. It's not really going into detail because you could do a whole nother webinar on that. But I think the idea overall is to look at, you know, what's critical to your organization, like what are you doing and what do you need to do to continue operations in the case of whatever scenario you're looking at. So you're taking a look at what could happen, I guess, what's the worst scenarios, whether it's pandemic that happened or other things like a natural disaster. We had this year some political issues where people couldn't get downtown. There's tons of things that could happen. And so there's still plenty of planning and risk assessment to do, I think. So we have actually a white paper on our website that's available that goes into a pretty good detail. So I think that's a good resource if you are trying to plan and do a business continuity policy or plan for the current year. But that's just one of the key trends that we're seeing and something that I would highly recommend that you look into if you don't already have one. Okay. The next couple slides is looking at the recent updates on the procurement guidance that has come out. So if you're not aware, the micro purchase threshold has increased. It can now go, it used to be 10,000, it's up to $50,000. And you have to qualify with certain criteria that are listed below here. You can't just automatically put this in place, but if you're gonna take advantage of this, you have to have a self-certification on an annual basis. And the requirements for that are that you qualify as a low-risk auditee in accordance with the uniform guidance. You have an annual internal risk assessment that you're doing to mitigate your risks. And if you are a public institution, you have the higher threshold, has to be consistent with state law. So when you say you qualify as a low risk auditee, based on the checklist that we complete for our single audits, that means you actually, if this is your first year getting a single audit, you're not going to be low risks. So you wouldn't be able to take advantage of that higher threshold just based on that. But as it says, just look at your most recent audit if you did receive a single audit to see if this applies to you. There's also another provision where you actually are permitted to request a threshold that's higher than $50,000. So that's available, but it actually has to be approved by your cognizant agency for indirect costs if you do want to take advantage of that one. So that's the update there. And then next slide is looking at the simplified acquisition threshold. So you're probably all aware, but that's the amount below which the entity can be doing their small purchase method of procurement. So, you know, you're not doing like the sealed bids and all that. And this has been updated to actually up to $250,000. So as it notes here, the entity is going to be responsible for determining an appropriate threshold based on their controls, risk evaluation, and their actual procurement procedures. So as you're looking at this and considering whether you want to update your policies, just keep in mind that, you know, it's very important to be reasonable and follow what your, you know, is appropriate for your organization. So if you never have done a procurement of above $50,000, like you probably don't want to implement that as your threshold. And the other thing is that you know, we're testing against your policy. So again, if you haven't updated your policy and we come in and you tell us that you've updated the policy, or, you know, to a certain amount, make sure you're documenting that. And also, just as it notes here, highly recommend that you review the section of the uniform guidance that talks about the methods of procurement to be followed for any of the things that have changed recently. And especially if you are thinking about implementing any of these increases to your thresholds, just to make sure that you're aware of all the rules and regulations.
Thanks, Lindsay. Well, we've now come to our third and final polling question. Polling question number 3. Does your organization plan on increasing the procurement threshold? Please answer yes, A, B for no, or C for unsure. Please take a moment to answer. And while participants are submitting their answers, I'll provide the third and final CPE word. The third CPE word is purchase. If you would like to receive CPE credit, please jot these words down, as you will need them for the survey following the webinar. Again, the third CPE word is purchase, P-U-R-C-H-A-S-E. Quick look at the results. Yes, 30%, no, 39%, and unsure, 30%.
Okay. All right. Yeah, that's a very interesting breakdown. So the biggest, I guess, portion in there is not really planning on updating, which, to be honest, it doesn't totally surprise me. I think that for the most part, we've been seeing that organizations have put in place a procurement policy that kind of fits their organization. So the increase to 50,000 might be a bit much, but okay. I think if you move on to the next slide. So here we have a few reminders about just how to prepare and document your SEFA as you come in and prepare for your single audit. So as we mentioned, I think before, you do need to separately identify the COVID-19 expenditures on the SEFA. So you want to make sure that that's done prior to us coming in, because you don't want to have a comment or a finding on your preparation of the schedule, of course. And it's pretty simple, just add the prefix COVID-19. I think the more complicated part here, it's obviously the pass-through entities have to separately identify to their sub-awardees that these are COVID-19 funds. You're supposed to identify the federal award number, the CFD number, and the amount of the actual COVID-19 funding. So this also indicates that if you had an award that you were making subawards on previously, and now you've had some additional funding that's COVID-19, you are supposed to identify the actual incremental amount of the COVID-19 subaward. So they could have two amounts on their SEFA. One would have regular non-COVID funding, and then obviously a COVID-19 prefix on the second line. So just keep that in mind as well. Just because it's partially funded by COVID, then it might not be completely. And then the last point on here is a really important one that they've been very clear on, that you are not allowed to charge the payroll costs that you're paying with the PPP or the Paycheck Protection Program loans or any of these other Federal CARES Act. You cannot charge those then directly to the federal awards, because obviously then they would be paying for it twice, and we don't want that to happen. So it's, that's one of those things that seems obvious, but be prepared to verify that for your auditor and show how you made sure that that wasn't happening, because we'll be needing to verify that as we come in to do our audits. Okay, this slide is just showing an example of your data collection form. If you are preparing the data collection form, or if your auditor is helping you out with the preparation of that, you're going to just have the column there of additional award identification, and then just show the COVID-19 prefix there. And it's pretty straightforward, I think, but it's what we'll need to do for the current year. And then on the next slide, this is an example of how you would prepare your SEFA or your schedule of federal expenditures for your auditor in the current year. Again, just put the prefix on there, and everything else is pretty much how you normally would prepare it, but let's take a note of that. Okay, and then for auditors, I mean, this is really as much for auditees, but if we do have a finding on a COVID-19 funded program, we have to actually identify that as well on the schedule of findings and question costs. So this is an example of how that would look. Basically, we just have the program name, and we would be, again, adding that prefix to the program. Okay, so then there's been even more changes and updates coming out since the initial compliance supplement and all that, the things that we talked about a little bit earlier in the slides. So December, Congress passed another COVID relief bill, and this was increasing federal funding towards, of course, more programs, and making different changes to the programs that were established by the CARES Act. So this included actually $284.5 billion in PPP funding, and that is currently still available and accepting applications through the end of the month as of right now. I know there's been some issues with the delays in that funding kind of getting out to the people that are trying to borrow it, and different kind of turmoil on the guidance and whatnot. So I don't know at this point, that's the deadline, but we'll see. There's also, if you've been obviously keeping an eye on the news this week, another COVID relief bill that's, I guess, likely to be signed by the end of the week. So another 1.9 trillion. So we anticipate more changes and more information to share on that very soon. So things just keep on changing, as we mentioned several times. But with this is kind of the PPP funding that is already out. There were some changes with that, including new borrowers, new categories of borrowers, which was good news for our 501c6 organizations that were allowed to access some of those funds now. However, it was very clear that the PPP loans cannot be used for any lobbying activities or expenditures. And with the second draw opportunity that was permitted, it had certain requirements, including a 25% reduction in gross receipts. So that means that some organizations were eligible, others were not eligible based on those gross receipts. You also had to certify that the first PPP draw that you had was forgiven, or not, sorry, was not forgiven, but was used before you ended up applying for the second round. The forgiveness is not required in advance. One question that I've received, I know from clients, is if the gross receipts amounts include the previous PPP loans, and guidance said that it was not required to include that. So that's just a point of information there. And then for those of you that are either applying or waiting to apply for forgiveness based on your bank's portals or whatever they're putting out, there is a simplified forgiveness for the lower amount loans. And so that's great news for some organizations that are trying to apply, and that can hopefully ease that process a little bit. So I believe that is the last slide here. And at this point, we have a few minutes to go over any questions and other information, but also it has our contact information here. So if we end up, not getting to your question, or you just want to reach out on any of the topics that we've had, definitely take note of that and feel free to reach out to us.
Thanks, Lindsay. Well, we did have a question come through the Q&A, and I believe Walt's going to take this question. The question is, could you explain why the PPP loan is not subject to the single audit? Is there a clear reason for this?
Thank you, Omid. The PPP loans are provided through financial institutions. They are not considered federal financial assistance. However, one thing I do want to note here, loans from the EIDL program are dispersed directly from the SBA and are therefore regarded as federal financial assistance and are subject to the single audit.
Thanks, Walt. I have another question that came through to me on the chat. Lindsay, perhaps you can take this one. What are you seeing your clients implement to address the change in the control environment due to remote work?
Sure, thanks, Omid. So a lot of it's been technology. And so, for example, a lot of our clients that weren't on bill.com or something similar where you can process the approvals electronically have been switching over to that type of a system. I think it's great for not only maintaining your documentation electronically, but also, of course, those approvals when you're not trying to, shuffle things back and forth to have different people sign it. So that's been a huge one. Another thing is DocuSign. So for things that you need an actual signature on, rather than having people print it, scan it, sign it, and all that stuff, DocuSign has been one that we have used as well to send documents back and forth to clients so that they can sign them. I've also seen a lot of creative use of Zoom and meetings or whatever technology people are using. Actually had a client tell me recently that they, instead of having somebody sit in the conference room with another person, they had kind of an observation system where one person would open it, another person would be in Zoom, and they would do the checklist that way. So I think that that's kind of some of the areas that have come up.
Thanks, Lindsay. Here's a question from Tina. What is the dollar minimum for EIDL loan for an EIDL loan that is subject to single audit? If the EIDL loan received was $10,000 or less, is a single audit still required?
I'll take this. So, for a single audit to be to have to be performed, you have to have expenditures in excess of $750,000, which would trigger the single audit. But, you know, we would have to look at, you know, what is our major programs and determine, you know, if that would need to be tested. So, you know, we would need to make sure that the SEFA has that information on it, and then determine if we need to test that as a major program.
Thanks, Walt. Here's another question, Lindsay. I'll ask this question from you to you. The question is, if we raise our micro purchase threshold higher than $50,000, do we have to repeat the procedure every year?
Okay, thanks. Yeah, so if you're doing the above $50,000, once you get your cognizant agency approval, that is going to stay until the situation changes or something changes on that. It's if you do the one from 10,000 to up to 50,000 where you have to self-certify, that's the one that you have to do annually.
Thanks, Lindsay. Walt, here's a question for you. Is there any requirement for an individual recipient or subrecipient to seek approval for the 3-month extension when submitting the single audit?
There is no requirement for individual recipients or subrecipients to seek approval for the extension, but the addendum advises that recipients and subrecipients should maintain documentation of the reason for the delayed filing.
Thanks, Walt. I think we have time for a couple more questions. Lindsay, let's see. The expiration date for the application for the PPP program is March 31st. Given this constantly changing guidance and delays at the SBA, is it possible that there will be an extension of that due date?
So on the due date, yeah, there's been a lot of back and forth on, you know, the fact that things have been held up kind of on some of the borrowers getting, and there's a big rush for everyone to try and get their applications in. So I do know that the AICPA and the banks and others are pushing and calling on Congress to extend the due date. So I think there's a potential, but it hasn't been updated to my knowledge at this point. But I think that's something to keep an eye on as we go through the end of the month, near the end of the month.
Thanks, Lindsay. Next question for Walt. If you are receiving, if you are treating the PPP loan as, if you are treating the PPP as a loan and not a conditional contribution, and you receive forgiveness from the bank after the fiscal year, but before the issuance of the audit report, should our organization recognize the revenue?
You know, if they're treating this as a loan, and I believe I covered this earlier, if they are treating this as a loan and they did not get forgiveness from the bank until after their calendar year or the fiscal year, then they should not recognize the revenue until they have received that acknowledgement from the bank. Now, again, if they have documented and their argument is that this is more of a conditional contribution, and that they have met those conditions, and they believe that these conditions are more administrative in nature, then they should recognize the revenue as they have met those conditions in their calendar year.
Thanks, Walt. And we have one final question. I think we have time for one final question. Will auditors need to test for FFATA if the organization does not receive any COVID-19 relief funding?
Effective if your fiscal year is after September 30th, 2020, the auditors are going to have to test for FFATA, irrespective of receiving COVID-19 funding.
Perfect. Well, thank you both, Walt and Lindsay, we would also like to thank everyone for attending today's discussion. We encourage you to follow us on social media at GRF CPAs and visit our website, grfcpa.com, for upcoming events and alerts. And please remember to complete the survey that will be emailed to you following this session if you would like to earn CP credit for attending today's discussion. Thank you again and have a great day.